yeah, after trading for a while, I got back into Tyson's trend following channel. In there, shout out to Donnie, Ghost, Miss Jones. Miss Jones, actually, when she took that Netflix call this past week, she held that longer than I did, and she made a friggin' killing. So shout out to Miss Jones. She got some crazy patience. Tim Hanel as well. That kid goes ham. Great overall feel for the market. Guys just trying to make money up in that trend following room. So shout out to those guys. Shout out to Tyson as well for letting me back in the room. But yeah, man, I mean, not too much else to talk about. Just that, trading's really, impacting my life. And it really comes down to, you being committed. If any of you guys are struggling out there, whether it be with penny stocks or blue chips or whatever, just stick at it. You gotta, I'm kind of obsessed about this shit at this point, which is, but for good reason, for everybody. We gotta friggin', you put in the time, you reap the rewards.
Boss.
Sure, everybody gets what they deserve.
Boss, you got a quota for the end of the year?
What up? Say again, Tice?
You got a quota for the end of the year? You're at 11 now.
You broke up there at the...
Do you got a quota for the end of the year? Yeah, like a goal, because you're at 11 now in profits, you said, somewhere near there. You think you'll be at 50 by the end of the year? Or are you just going to let the process kind of figure out where it's going to end up itself?
Yeah, exactly. I try not to force it. Just try to stick with the process, stick with what's working for me at this point, and just grow it that way. You start getting away from what works, and then just back to restart it. But yeah, I don't really have a goal, man. I mean, obviously, a lot of people are looking for that BET threshold, but the sooner I get over that, the better. But not really a goal. Just trying to keep growing. And yeah.
So what are you looking at this week, man?
Let's see. Again, like I said, I'm not going to be trading too many tickers. I'm going to be looking at Netflix, Amazon, Google, Tesla, Chipotle. I traded Boeing last week as well. So, I mean, it all depends, man. It depends on what the charts are showing. Last week was a pretty shitty week, and I still ended up, being green on the week. Mainly because of that Netflix trade. But again, that's the beauty of options. It's like you can have one huge winner, and you can have maybe 3 or 4 losers, and it won't even matter, because that one big winner will wipe out all of those losses, and you won't even be thinking about that. I got these HMNY calls, these 2020 calls, right? That are probably like, I don't know, they're like 5 cents now. All right. And you guys all know HMNY, piece of shit stock, but whatever, man. $5 calls out in 2020. Maybe they get their shit together. Who knows? But that's just the thing. It's like you have a capped risk. Whereas if I had 5,000 shares at HMNY at like $3, it's at friggin' 30 cents now. You know what I mean? So it's like I much prefer playing options now than penny stocks or any type of, equity.
Me too, bro. Me too. They're addictive.
Oh, for sure, man. So I definitely felt like I overtraded sometime, at times last week as well. Just, taking trades that, just because I was looking for action, you just got to remind yourself not to do that.
Netflix or a Tesla, these are 2 stocks that people have been tearing up with options too in the last month. What will you look for? You'll be looking for a price action start of the day, or you give us an idea of how you're looking in a position.
All right, so for the Netflix trade, let me see if I can find that. Hold on one second.
And also, are you doing like so many others with that are successful with regards to tracking your trades or writing them down so you're seeing what's working best?
Honestly, man, not really. Not really. I don't really track my trades like that. I just kind of, I trade and let the results speak for themselves.
This is nice, man.
But anyway, I mean, this was made in like probably 5 minutes. This Netflix trade, not even, probably like 2 minutes.
What the hell you guys doing, bro?
Yo, what the hell you got?
Yo, dumbass.
Yo, money is funny, man.
Y'all thirsty, bro. Y'all thirsty, bro.
Nah, man, we just having fun time. We just having fun, man. That's all we doing, bro. We just having a little fun, man. That's all. We ain't thirsty, bro.
That was thirsty, bro.
Oh man, this room is hilarious sometimes, bro. This shit had me in tears, bro.
Hey, Sean, is that a catfish?
Yeah, that's funny. Now,
Is that
she
catfish?
knows what she's talking about. If she's really going where she says she's going.
Man, go ahead, man. You were supposed to go check it out for us, man.
Y'all goofy as shit, bro.
Man, we just need to know if she fishing. She could be a damn dude, man.
It could be AR for all you know. He used to live up here.
Man, I went to the strip club, bro. Hold on, man. I went to the strip club like 2 nights ago, man. Why this bitch dancing starts yarning and damn near falls asleep on the fucking stage, bro? While she's dancing. It's the craziest shit ever, bro.
It's probably that roll of quarters you threw at her, hit her in the head.
I said, what the fuck is this, man? The bitch is yarning. I told my girl, I said, look at this bitch, man. She's yarning, yo. Like, get her the fuck off the stage, man. Her half pregnant looking ass.
She gotta pay the bills.
This shit was crazy. Yeah, that was the worst strip club I've ever been to in my life, yo. Them bitches were, oh my God, it was terrible. The drinks looked better than the female. What the fuck, man? I was like, yeah, it's time to get the fuck out of here.
Hey, boss, you got anything else on what you got for the week, man?
Yeah, I'm sorry, man. You know,
No, you good. I want to take up Ross. Rock solid trader on that SCRPT. Now, what was that? SRPT?
Sarepta Therapeutics, right?
Yeah, I was watching that myself. That shit
because
2 days
Rock
was
Solid
moving heavy.
Rock Solid was in here last week, and he was talking about taking a position on that. I think they got something stupid.
Yeah, Sarepta had some crazy news.
Yeah, that shit on Friday was down $9.
Yeah, it'll come right back up. There was another one too. I'm looking at Blue. I don't know if you guys are looking at Blue Bio. Took a big hit on Friday. Had a major sell off towards the end of the day.
That shit is just coming off a 52-week high. SRPT. You said Blue? Let's see what it looks like.
I mean, the chart looks like shit at the moment, but it's, in my opinion, oversold. Caught a few upgrades. I don't listen to many analysts, but if there are multiple analysts, calling for upgrades, then I take notice.
It just broke 200 too.
Yeah.
Shit, that could be a little downtrend for a minute, maybe, possible.
Oh, and that actually brings up another point. Hold on, let me put in a little attachment.
I think I had that on my list at one time. We'll put it back. Let me see what kind of yeah, see that's
people were asking a couple questions in the text.
That's the only thing I don't like about that shit. Blue is a month. Now I ain't really playing no monthlies. SRPT, I was looking at that the other day. That shit happened.
Yeah, I called that shit out nice.
Yep. All right. So yeah, here's another example. So PANW, I was looking at this a few weeks back.
Yeah, Bounce Up Network.
Yep. So PANW, they came out with earnings, right? I think they beat earnings, and then right after they caught multiple price upgrades, right? So pretty much what I waited for here was just for the downtrend to.
It's downtrending again, it looks like.
So yeah, so I got a downtrend line right there on the first picture, and then if you look at the other photo, you see what happened to the stock after that downtrend. That thing just ripped, went back from 195 to all the way up to 215. So right when that downtrend started to break, and you can see it, I use the hourly chart because again, you zoom out, that shows you the big picture. So right as that downtrend broke, okay, I grabbed a 205 call. Okay, in the next few days, that thing rips. This was easy 100, 150% on that option call. So this is like people ask like, oh, what's your strategy? What's your strategy? I don't have like a set strategy. I just keep things basic and simple. If I see a downtrend break, and then, this was kind of a perfect storm because I knew the stock would come back up. It caught like price upgrades up to 220, 230, 240 from multiple different analysts. Now, I'm not big on following analysts, but if 4 or 5 analysts come out with a high price target, you can bet that, that stock's going to move. But of course, you got to wait for the sell-off to be over first. So I waited for that sell-off to be over, downtrend cracked, bang, grabbed a call, cashed out 150% easy.
What was, where did you end up selling?
So I probably sold around the 205, 206 mark. But again, this was I took like one option contract. I don't trade big size. I take maybe one contract, 2 contracts. That's it. You start taking 4, 5, 6. Your size gets, your size gets too much for you to handle, and then most likely you're going to stop yourself out for a loss. And that's another thing. I don't use stop losses.
Now, what's the story on Blue?
Yes, I did. Mag 3690. Yes. I did take a chance on the earnings. It was a gamble, and I don't recommend anyone doing
that. But I mean, 150% on option is pretty much standard. I mean, that's not, the percentage wise that, you could get that in a day, bro, easily.
Yeah, exactly. Oh shit, rock solid. That's a nice chart, man. Shit.
Yeah.
Whoever got calls on Sarepta, man, was banking huge this week. Shit.
The chart was nice. I liked it, but I didn't take any calls on it only because the spreads were horrible. But a couple of my members took some daringly enough, and he took like $300 position and made like over $6,000 or $5,000 on it.
Damn.
Yeah, I day traded it the first time it broke my target, and then I got out of it and made some money, but that was it.
Yeah, man, that's what's up. And that's like another thing about options is like the whole earnings play. Like some people are like, oh, you should never play options into earnings. My view is like,
I'll play options sometimes, but not earnings.
Earnings, right? Yeah.
Yeah, not often. Like if I do, I'll risk like maybe 0.5% or something, just as a lotto. That's all.
I feel you, man. I feel you on that because our earnings it's a complete gamble. But again, if you only risk in $100, $50 or whatever, and that hits, that'll be a crazy percentage gain. I've hit 500%, 600%. And that's an account booster for sure, and a confidence booster.
Yeah.
But yeah, man, that's all I really had to talk about. Just wanted to share my experience.
Hey, thanks, boss.
Thanks for having me, fellas. Thanks for the time. I like seeing. I like the. I'll be a regular. Every Saturday. I love the show. Shout out to Tyson, Stock God. Shout out to all you guys, man. You guys really helped me out, especially when I started off. Stock God, if you'll have me back in the room, bro, I'll friggin' get in there, man. Help you guys out.
It's always open, bro. All you gotta do is come in.
Hey.
That's what's up, man.
Yeah, the room is they're in here Monday through Friday, bro. Everybody's in here.
Hey, boss, which
Respect.
part of Boston are you in? This is Bad Scientist. What part of Boston do you live in?
Hey, Bats, what's up, man? I'm in Jamaica Plain. I don't know if you're familiar with the area.
Yeah, my brother's out there in Boston. He stays near Newton, I guess. How do you pronounce it? Wabin?
Wabin.
Wabin. Okay, yeah, that's where he stays.
Cool, man. That's what's up. Yeah, hey, Bats, man, I really enjoyed your segment last week, man. It really opened my eyes to some things, especially about honing in on, one or two stocks and just, playing those. So appreciate you too.
Hey, Bat Scientist, can you hear me?
Yes, I can hear you.
All right, look, so can you let me, just from your technical analysis on the daily chart, on the SPY, how are we looking this week coming up? Do you see a breakout, still consolidating? I haven't looked at it yet, but I know you study it like a hawk, and I need some direction, overall market, some more value. So what are we looking like this upcoming week?
Okay, so looking at the daily chart, sorry, on my laptop, but let me bust that out quick. Hold on.
Oh, it looks like it hit a little top up there. Okay, I see that.
Looks like it might be perfect for you, though, Stock Guy. Looks like it's downtrending in May.
I want that bitch to break out. I want to go long.
Oh, do you?
No bullshit, yo. More volume. It's not consolidating. It's broken out. There's more people buying. It's just more directions, more volume, and that helps us out big time with my shit.
Actually, I'm looking at the SPY. It looks like it,
It looks like it could go down more or just consolidate more. I don't know.
Yeah, so I'm looking at the SPY right now. Definitely, if you're big on candlesticks charts, what you have there between Friday and Thursday, that is called a bullish homing signal. It's bullish homing pigeon, where you have a red larger candle and then a smaller one in it. It's actually a bullish sign, but that specific candlestick setup is not as reliable as, like a bullish engulfing, candlestick or something that gaps up. But this one's a tough one for me because the SPY tends to be like really temperamental. Let me see something here. If it may drop down to 274 and retest those levels, but right now, if all you do is interpret candlesticks, that's actually bullish.
Thank you, sir.
No problem. And in addition to that, I'm also looking at I have my Ichimoku cloud up as well. It gives you, future support and resistance. Future actually looks good. The cloud is actually green. Price is above, above the cloud. It broke out of the cloud. What date was that? May the 9th. And it's actually been bullish from May the 9th. It stayed above the cloud, with, like I said, future support and resistance. It's clear skies ahead. So what you want to look for, coming on, on Monday, below the cloud would be at about 267, 268. I don't think it's going to go down that far, but that's for longer term plays. So my cloud's confirming that this is bullish in the long run at least. But as for what would happen to the SPY specifically on Monday, China could come out with new tariffs and it could come down. It's not the SPY, like the VIX, is temperamental. So if things are going well one day, it will have a good day, and then Donald Trump says something the next day and it tanks. So, yep, that's my assessment.
Thank you, sir.
Sure thing.
I think in the next couple of weeks we'll probably be going all the way back up to test all-time highs, around 2,800.
Oh, on the SPY, is that what price target is that? Is like 280 something on the SPY?
Yeah, yes, sir. Like 282.
Okay, here I've got it at. Let's see here. Got it at 286.63, which it made January 26th. At least that's the 52-week high.
Yeah, it's very likely that we're going to be testing that in the next couple of weeks.
If it starts going up, guys, use my strategy that I told you, especially if it's going up. If it's establishing an uptrend, one good way of making money is just go in on the previous day's low and just hold that thing into the next day. You could even hold it for multiple days as it's going up, but even just an overnight swing trade when it's going up, because you're catching low of day, and essentially the next day you're going to get a gap up, make $1 or $2 on an options play, which we all know is huge.
Now, what about how are you determining the low of day though?
Yeah, and that's harder to do because most traders will tell you don't try to time lows or highs. Ironically, that's all I do. Time of day is important. So, for instance, if it's like in the last 2 hours and it's established the low of day or new low of day in the last 2 hours, that's when I would say you should get in. Because what it tends to do when it hits a high or tends to start reversing in the last 2 hours, or like we all know in power hour, that's when it starts reversing. So I've nailed down to the last 2 hours of trading. Just look at the SPY, look at the charts from previous days on the 5-minute, and you'll notice that whenever it hits a high of day, in the last hour or 2 hours, it sells off. If it's a high, or it rallies if it's at a low, and it's so damn predictable.
Now, Bats, do you day trade the SPY or do you hold overnight as well?
I'm more comfortable day trading it, but I've actually made my biggest gains have come from swing trading it overnight. It's just I don't like the fact that something can happen in the world and then the SPY just moves, because you could be in an uptrend, right? And then China comes out, or maybe Kim Jong-un says something nasty and it moves, or maybe conversely, you could have it, it could be coming down and then there's a good jobs report and then it's up the next day. So what I like to do, which is helpful, is before the market opens, look to see how the futures look. If it says futures are up, then you know that there's going to be kind of like an uptrend bias on the SPY for that day, not necessarily for the week. If futures are down, then it's going to have kind of a downtrend bias. So I keep that in mind when I'm trading, and just make sure that or sometimes I try not to go against the trend. Although the SPY is predictable, you can actually go against the trend because you're day trading.
Now, are you calls? Like, are you call biased or puts? Does it matter? Do you
No,
play both?
I make equally the same amount of money in any direction. I'm actually balanced 50-50. So it doesn't matter what time of day. If it hits a new low of day, I'm obviously going in with a long bias. And if it's establishes a high of day, then I'm going in with a with a short bias. But yeah, I make money. This is the beauty. You're talking
Yeah,
to
we all know that, man. We see it every day.
you're talking to someone who never shorted before, because I mean I've had 5-7 years trading regular stocks, and I seldom day traded. I never even used the 1 minute. I couldn't short. Then suddenly 2.5 months ago, when I learned the SPY, suddenly I could short by buying puts, and I'm using the 1 minute. My whole game plan has changed, like technical indicator three bring two. Support and resistance. Don't let Fibonacci's. It's not necessary that you like using, or that I like using Fibonacci's, but it's other traders, the experienced traders. Those are the people, using those indicators. So it's you're into the head of the traders, as opposed to trying. I'll have that one on my chart, and I'll have Fibonacci levels or pivot points, which is in essence, pivot points and Fibonacci levels are just cheat technical indicators for support and resistance. And then obviously with Fibonacci and pivot points and support resistance, you don't have a trend indicator. You need a trend indicator, and that's where I use the Ichimoku cloud. And I use the Ichimoku cloud where I'm just looking at the cloud. I'm not worried about any of the other lines. I take them out on my TOS platform and just have the cloud, because that's going to give you support and resistance, which technically I don't need because I've got the Fibonacci levels. But what it gives me is trend. And what you're looking for is the color of the cloud. If it's red, it means that it's in a downtrend. If it's green, it's in an uptrend. If the cloud itself is horizontal, that means that you're in some kind of consolidation. If now the angle of the cloud, if it points up and it's green, you're in an uptrend. If it points down and it's red, you're in a downtrend. So I've simplified everything, including how you trade options with the SPY, to where anyone in a matter of a few weeks can actually be able to trade, because then you're not looking for too many things here. You don't want to overly simplify it, but at the same time, you don't want to make it like too technical or too hectic where you're looking at so many different things. So I would say Fibonacci level, the Ichimoku cloud, or even RSI works brilliantly. You could have just the Fibonacci level and RSI and just trade using those two indicators.
I only just recently started charting the Fibonacci retracements, and it's been blowing my mind how accurate they are almost any time scale.
Absolutely. And what's even worse than that, so because new days or lows of days are being established, you have to recalculate or redraw the Fibonacci's. So they're constantly changing throughout the day. Even when you redraw them, it's amazing, like you said, how much these lines are respected in terms of support and resistance.
I assume that's why you use the word cheating, because I was like, that's a weird way to talk about it, but actually, it almost feels like you're cheating.
Well, it is because I mean it's giving you support and resistance where you don't have to figure it out on a naked chart. So that's the only reason why I think if someone came in here right now and said, "Okay, Bats, I want to be able to trade with the least amount of what do I need to trade?" I would say Fibonacci levels to give you support and resistance because it takes many years to learn really how to read support and resistance off of a naked chart. It's not just something you can learn overnight. But what Fibonacci is, yes, it's a cheat for support and resistance, and then all you need in addition to that is something that gives you trend. So RSI, or like I said, I use the Ichimoku cloud, which people find difficult because they never explain it properly. You look at the Ichimoku cloud, right? What confuses people is they're having, just like trading, they're having to learn all those Japanese terms. And so while their mind is focused on all the technical, the jargon of all those, what is it, 5 lines, they now have to figure out, in addition to that, how to use it. So just simplify it. Take out all the lines. Just keep the cloud. Above the cloud is bullish, below the cloud is bearish. Red cloud bearish, green cloud bullish. That's all you need to know. And once you know that, you can start adding the next components if that actually, strip it down to its bare minimum and start building it up if that's what you want to do.
Yeah, and you look for cloud breakouts and breakdowns when it goes through the cloud.
Correct. Yeah. Okay. So so you you can go to historical, anything that will give you historical prices. Yahoo Finance is really good with that. So type in the SPY in Yahoo Finance. You'll see there's a tab that says historical prices. You click on that, you can pick the dates that you want. So for instance, I could pick the last 10 years or the last year. You can download that as a CSV or Excel file, and then what the historical prices will give you is each day's high, low, open, and close, and you basically analyze each of those days for as way back as you want, or from as recent as well, whatever time frame you want to look at those daily, like, historical prices. And so that's how I was able to see that the SPY moves an average of $2 a day. How is $2 defined? That's the trading range, which is the high minus the low. The highest price minus the lowest price, that's your trading range for the day. And that's what the SPY average is about $2 every day. There'll be some days you'll notice, like beginning of this year, there's some days where it moved $5 or $6. There'll be some days it'll only move $1.50, but the average over the last year or the last 10 years is around about $2.
You also
Yeah.
got a question. There was somebody who asked specifically, when you draw the fibs, do you draw from top to bottom or bottom to top?
I do them from top to bottom, but it doesn't matter. Whatever system you have, do it the same way every time. If it bottom up, that's fine. This is where the Fibonacci is a little tricky because it's kind of subjective. I typically draw them top to bottom, and I stick with that top to bottom every time. I never reverse the direction. And my best setup is, in the first hour or two, you get the high and the low, draw your fib levels, and then you're looking at, all those different levels along with the 50% retracement. Put VWAP in there. VWAP will give you extra support and resistance, and that's really it. Sorry, people are asking questions. I'm not at my computer right now, just talking over the phone.
So if you're looking at a high to a low, you'll go from top to bottom.
Correct.
And then what was I going to say from there? One other question on that was, will you typically wait for some sort of confirmation, or will you put your order in based on just what you already perceive from the combination of the Fibonacci and your VWAP?
Yeah, I'll typically wait for confirmation, so I'll look for like a double bottom or a double top on the 1 minute chart. Or if I'm lazy, or if I'm actually, working, which is what I should be doing when I'm day trading. I should be doing my full-time job, but because I work from home, I've got time to do both. I will starting the first time. Don't worry about what happens, at the beginning of the day. Yes, the volume is the highest at the beginning, but for the SPY, thank God, it's also high towards the end of the day. So for newbies starting out trading the SPY who don't want to be watching it for hour upon hour, during the day, just wait for the last 2 hours. If it's at a high at the last 2 hours, get in with your puts at that high. And if it's at a low for, in the last 2 hours, get in with your calls and just scalp. I mean, all you need is 25 cents to 50 cents off of an options play. That's more than enough. The problem comes when, you've got that OTC mentality of, oh, I need to make 100% or I need to make, 200%. You don't need that with options. With options, a 25-cent gain is good. That will give you anywhere between 10%, 20%, depending, of course, on your expiration date.
Thanks for all this, guys. It's been wonderful.
Yeah, sure. If anyone else to talk, jump in. I can talk for hours. So if you guys still want to ask me questions, go ahead. Yeah, I could talk. I could talk until 4 a.m. tomorrow. This stuff excites me, and it actually helps me communicate my ideas when people ask me questions or even challenge me. Those who have ideas about the SPY that they're like, well, Bats doesn't know what he's talking about, challenge me. Like, I dare you to challenge me. I might actually learn something. So it works. It works both ways. Okay, so I started trading about 7 years ago. Obviously, like most traders, stories you've heard, lost a lot of money. I think in my 7 years of trading, probably lost about $50,000. I was good for it. I mean, I'm the type of guy that saves a lot. I don't spend my money. So 50,000, yes, it's a lot of money. But over 7 years, someone who just spends money on stocks and nothing else, it's not too bad. But anyway, lack of experience and just being stubborn, because I am a scientist, hence my name, bat scientist. I'm a cell biologist or molecular biologist. I travel as a field scientist all over the country, helping pharmaceutical and biotech labs do forensics, DNA and protein and all that good stuff. I help them with experiments in the lab. So I'm an actual scientist. So yeah, seven years ago or so, started trading stocks. Got into candlesticks formation, candlestick patterns.
That's you
I
green
love.
yet? You said you
Sorry,
lost 50,000. Are you green yet?
am I what?
Green. Have you recovered from that? Have you recovered from your
Yes,
pullback?
I have.
You're
I have.
down. You're down with your drawdown.
Yes, definitely,
Recovered from your
definitely.
drawdown.
Yeah, so until about the beginning of this year, so like I'm obsessed with candlestick patterns. I'm the type of guy, scientists can get stubborn and sometimes, they are their worst enemies because they think they know everything. I'm the type of scientist where I actually admit I don't know everything. And so that makes me better as a person, better as a scientist. Uh, but what I learned, yeah, I learned a lot of candlestick patterns. I know them in and out. The Ichimoku cloud always intrigued me, not only because it tells you a lot, but because it's difficult. People don't understand it. So that was a challenge for me. I specifically picked the Ichimoku cloud because people don't explain it well, and people just they're so afraid of it. So for me, that was a challenge. Took a couple of weekends learning that, found, good people that can explain it. One woman, this British old woman, her name is Nicole Elliott. Um, she struck a positive chord with me with the Ichimoku cloud. And then once I knew how it moved, I just simplified it for myself. I used to post charts of the cloud on Twitter, and people are like, your charts are confusing. So I decided, let me just take off all the lines. I'll trade with just the cloud itself without all those lines. And it's actually worked out quite nicely. So the SPY, so once again, I was trading just stocks. And then this year, because my wife works for JP Morgan Chase, we got slapped with what's called the FINRA 3210 rule. And if anyone works for a bank, so of course I'm passionate about trading. So I tried to look for ways in which, to trade that I could still make money. Briefly, this FINRA rule that the SEC has, if someone works for a bank, basically day trading is not, you're not allowed to do that. And for stocks, if I buy a stock today, my wife has to go and call the compliance people at her work, even though she has no clue about trading, but because I'm her husband and I trade, she has to get pre-clearance for me to buy a stock. So
Hey,
for instance,
Beth, question. Sorry to interrupt you. Is she a licensed? Is she licensed?
not even she business development in merchant services. She's not licensed for anything. It's
Okay.
just the bank, because she works with small businesses, they figured, or Chase figured, that she could know some insider deal. For instance, if Chase maybe made a deal with another publicly traded company, she could technically share that information with me. Yeah,
Okay.
even
Okay.
as ridiculous as it sounds, she knows nothing about that. She doesn't tell me about her work, but
How did
this
you
is the
find
role
out
that.
about were you guys notified, or how'd you
Yeah,
find out
so
about
at the
that?
beginning of this year, the bank came in and said, if you guys have brokerage accounts, basically you have to declare all of them. So at the time, I had Robinhood, Wells Fargo, TD Ameritrade, and Vanguard. So um, after we declared all our brokerages, I was actually told I had to close Robinhood. My guess is that because Robinhood is almost like a it's a renegade a renegade brokerage firm. They actually can't track my trading from Robinhood, and that's why they told me to close it. So the only ones that are there that I can trade with is Charles Schwab, Merrill Lynch, Wells Fargo, TD. Basically, the big banks is all that I can trade on. Interactive brokers I can't. Tasty Works I can't. Basically, anything that is not part of a major bank I cannot use. So that even made me more angry. But okay, so I was saying, if let's say I need to buy Google, my wife has to call them and say, "Oh, my husband wants to buy Google X number of shares. Do we have permission?" If they say yes, I can buy the stock. But then the problem is
You
I
have to
have
hold
to
it for
hold
a long
it
time.
for
Yeah.
at least 30 days. And if they say no, they don't need to explain why I can't trade it. Let me give you guys another example that's frustrating. Um, Beginning of this year, I bought Eldorado Gold, EGO. It's a Canadian gold company. Put $11,600 into Eldorado Gold. 2 weeks ago, I told my wife, hey, we're up on Eldorado. Check with your people and see, if I can sell. Guess what? They came back and said we couldn't sell. Now, um, so right now we're being held ransom on this stock that we can't even sell it. Same thing with GE, can't sell GE. So these are the frustrations I've had to deal with
That
um
sucks.
this year. So anyway, um
Bro,
about
that is nuts. That is so crazy.
it's nuts. And get this, for options, if I had to buy or purchase options for a regular stock like Facebook or whatever, I have to hold it for 12 months.
You're not you're okay with trading the SPY though.
Yes, and that was my point. 3 months ago, I had enough. Like, I was always arguing with my wife, and it's unfair on her because she works for them. It's not her fault, but I got to the point where I was just pissed off. I said, "Give me the number of these compliance people. I'll speak to them directly because this is BS." So, started speaking with them, and then found out that there are a few ETFs that I could trade that aren't subject to this FINRA 3210 rule. And then the SPY was one of them, and I had recently learned, I learned how to trade options, just basic buying puts and buying calls. And I'm looking at the SPY and I'm looking at it and I'm like, wow, I think I might actually have found something I can actually make money on. So yeah, 2.5. I think it was April 9th is when I started uh, day trading the SPY, and I've been green since. The last 8 weeks of trading, I've had more success in 8 weeks than I have in 8 years of trading.
I guess that worked okay for you, Bats, huh?
Yeah. Turned lemons into lemon. So
Well,
yeah,
Exactly.
you ended up being a lucky bastard that you were able to do that because the SPY is one of the best ways to trade the way you are.
exactly. And I mean, it's the top ETF in terms of like actively traded volume. Sometimes EEM is, like I said, emerging markets ETF is the only one that beats it on volume sometimes. But even when you add ETFs and stocks, it's always in the top 10 of the most actively traded, stocks and ETFs. So because of that liquidity and because of the tight bid ask spread on it, I mean, it's easy to get in, easy to get out. The SPY averages 82 million in volume every day. So yeah, there's a lot of volume in that. So when
Now,
I found out,
are you able to trade futures?
good question. I haven't looked into that. I think I am, but I'd need to check into that. Yeah, I started with stocks. I've moved to options. Futures is something that I could look into but haven't yet. Yeah, and that's my story. When I found out I could trade the SPY, I decided to learn everything that I could about the SPY. I took the 5 minute chart of the SPY, looked at it over the entire year, and just started studying each kind of like the open, the high, the low, the close. And on the 5 minute chart over the last 12 months, I noticed some patterns, taught myself everything that I could on the SPY. And now it's been 2.5 months. I haven't looked back. It's profitable as hell. Like I said, last week I made $8,000. I mean, 2 months ago when I started trading it, I started with $500, and I started day trading it, and I'm like, three day trades later, I'm like, I didn't make one loss. Then I started trading it the next week, and after like a month, like my wife, who was always my worst critic with stocks. She was like my worst enemy because for most of us who started trading, we lose a lot of money, and you're basically throwing our life savings away. But let's say 2.5 months, like, I think you have something, and then she started saying we need a bigger house. So we're actually closing on a bigger house next week. Yeah. 275 strike price. If it's at let's say it opens at 275 and then maybe dips to 273. At 273, I know that okay, that's the low of day. I'm gonna go in with a 273 call, but because I knew that the SPY fell $2, and it's depending on the time of day, I might not even pick 273 for my calls. I might actually go for like an out of the money and pick 274. If I'm even more confident, I could even go for 275. It just depends on the time of day, what high or low is reached. And once again, the 50% Fibonacci level is good because that gives you the midpoint of the trading range for that day. So technically, another way you could trade the SPY is if the early highs are established and you have that 50% level, you could just basically trade on either side of that. So, but to answer you, typically go in with an whatever strike price is closest to where the price is. Yeah, so my oh now I buy 50 contracts that are average price anywhere between 80 cents and $1.20. So $1 is kind of like the sweet spot for me. If I can't get it for $1, I play around with the expiration date until I get $1. So this is what I was talking about, dialing in everything. You've got hot water, you've got cold water. You're just dialing it into, maybe you just want, warm water, not hot, not cold. So you start dialing things in. You dial in the expiration date. You maybe look at whether it's at the money, in the money, out the money. And then for me, because I'm risking $5,000 per trade, I want to be somewhere near about the 80 cent mark and the $1.20 mark. That's the sweet spot for me. Oh no, you can get premiums on the SPY that are 30 cents. Yeah, 30 cents can $275 ETF. That's ridiculous. So when someone is risking, let's say 30 or 50,000 on a trade, I'm only risking 3,000, or I'm only risking and probably making the same amount of money as they are. I would actually argue, I think I'm actually doing better than people who are actually buying the ETF outright. Because I'm doing it through options, my percent gains are almost exponentially multiplied. Um, so yeah,
Well, just for right now, take a look. Like I
did. He did cut out.
can you hear me now?
Yes, I can
Yeah.
hear you.
Okay, so just as an example, right now, two strikes out of the money is 80 cents a contract, and then it's $1.25 in the money. Um, it's around that price. So just to give you an idea of where it's at right now, that's kind of
Yeah. So that's,
Which one are you looking at, living, Railway?
yeah. My Yeah, my confidence level is at 110%. I can go into a trade. Just to put things into perspective, there's a few guys that, people joined my Discord room, and we trade live every day of the week. Um, when people initially joined me and I'm saying, okay, it hit high of day, let's buy puts, or it hit low of day, let's buy calls. A lot of people were being stopped out, or they got scared, and I was saying, be patient. Like the trade, when the trade goes against me, I am just sitting and I am just watching, because I know what I know about the SPY. So people were cutting their loss, people were running away. There's one thing that traders, they say cut your losses quickly, but they don't tell you to. And believe I'm quoting Tim Sykes. He's not really one of my favorites, but um, Tim Sykes talks about cutting losses intelligently. There's a difference. When a trade goes against you, you don't just panic and sell, particularly if you're trading. And because most traders don't, let's say, like, oh, one stock is moving today, they know nothing about that stock, and yet they're trying to trade something they have no clue about, and so they panic, lose money. I'm just sitting, and remember, I've already factored in the trade going against me by picking an expiration date that's out far enough to where even if I'm wrong, I can at least break even on that. So while most people who traded with me for the first time were probably being stopped out, um, for starters, I don't use stop losses. That's how confident I am about my trades. And those who were patient, and I said, just hold on, watch. End of day, there's going to be a sell off, or end of day, there's going to be a rally. Those that stuck with me ended up making money. So I'm not saying trade like me, but my point is that when you know what you're trading, it doesn't matter what's going on. It's all noise. If the stock goes against you and you're in a loss situation, but you know the stock really well, and you went in with confidence, then don't panic. The trade, I say this, let the trade come to you. Do not go to the trade, or don't chase the trade. Let it come to you. 1 hour. Yeah. And if I've studied the SPY well enough to know that you don't have to trade it, in the first minute, yes, you could go with, a gap and go strategy like Ross Cameron, where if it gaps up and it's going to continue to go up, then by all means you can get in, once the bell rings. But I like to watch it. I'm very patient and very meticulous when it comes to the spy. While most people are running around trying to get in and stuff, I'm waiting for it. Money Green talked about it trading. It's choppy. Yes, it tends to be actually pretty choppy in the first 30 minutes or so. So I give it some time to kind of tell me what it's doing. And once it's, half an hour or later, I draw in my Fibonacci levels, get a high and a low for it, put in my VWAP and, sometimes my Ichimoku cloud, but really the Fib levels and VWAP. And then I start looking for extremes on the day. No, no, it's the high and the low of the current day on the 1 minute, on the 1 minute chart. So
On
if
the
a
on the
new
1 minute chart, are you using the 1 minute chart for the whole day?
I'm using 1 minute chart my end, and then as the day progresses, I can zoom out to a 3 minute or five. I don't use anything beyond a 5 minute chart. Because think about it, I'm making most of my money in 5 to 30 minutes. So it's pointless for me to look at a half an hour, like a 30-minute chart when I'm making my money in 5 minutes. You see, and that's what traders miss as well. In the time that you want to make your trade or capture your gains, that's got to match with your time frame. If it's out of sync, it doesn't make sense. So for day traders, you'll see that they use the 1 minute a lot, they'll use the 5 minute. You don't get day traders using um, a 1 hour chart, for instance, or a 4 hour chart. That just wouldn't make sense.
Now, are you only how many trades a day are you doing in this sort of
Okay.
strategy?
So once again, this is where I'm so successful because I don't. In a week, at the most, I'll put in 5 trades, but those 5 trades would maybe consist of 2 swing trades and maybe 3 day trades. So I'm trading with the PDT rule. And yeah, there were times where typically my average is really I make 3 day trades and that's it for the whole week. That's all I need to do. Although I break last week because the spy was just asking for it. I mean, when you see setups forming, I think last week there was one day where I did trade it 3 times. 3 times in one day. You
Yeah,
guys
I
still
mean, you could probably take your um maybe in the future after, I mean, you've got something that's working so well for you, you just do this until you get bored of it. But you could probably take the same principles and
Sorry, you cut out. You still there?
okay. Are you hearing me now?
Yes.
I was going to say, I'm sure you can do this forever, but if you could probably use the same strategy, but at a longer time frame and see the same patterns, just like as the.
Yes, definitely. I definitely could do that for my swing trades, but like I said, my comfort level, I always prefer to day trade because anything can happen. The worst I could do, for instance, or the worst thing that someone can do with the SPY or even like the VIX is to trade it on Friday and wait throughout the weekend and wait until Monday for it, because on Monday anything can happen. If something happens over the weekend, you're stuck until Monday. But I hear you. Yes. I do have, like I said, I do have swing trading strategies for the SPY, but I do prefer to day trade it.
Yeah, because the same patterns, like I haven't been able to do it yet, but the same sort of strategy and patterns worked out really well in the futures market. And
okay. Sorry, you've cut out again.
Okay, I'm just going to shut up for a while.
You're the only one asking me questions, though. So if you shut up, it's going to be very quiet in here.
Hey, Bats, I'm looking forward to learn more of your strategy. Maybe tomorrow. You said at 6:00, right?
Yeah. It's going to be 9:00 Eastern, or I'm based in Phoenix, so it's going to be 6:00 in California, Phoenix time.
Yep, I'm on the West Coast, so yep.
Oh, okay. Yeah, 6:00 West Coast time. Correct.
So let me do this. So when you're in the okay, so after waiting half hour to an hour, will you basically then you'll start you'll look at your Fibonacci and go from, well, depending on the low to high.
Yeah, so
on the
I'll look at my Fibonacci really for
on the 1 minute chart.
Yes, to gain entry. Then my exit is not as defined, because remember, we're between a 10% minimum gain. So if I think I can squeeze more out of it, I'll wait longer and wait for a bigger sell-off, bigger rally from the bottom. But lately I've been selling at web. So if I'm at high of day and I bought my puts, I'll typically sell at web or go for a 40 cent or 50 cent move. I'm not really married to a 40 or 50 cent move, but if I think the stock's gonna move more for me, then I'll hold on it for longer. And yeah, I've left a lot of money on the table, but like Stock God, I'm kind of scalping, scalping and making small gains. But of course, since it's options, those gains are actually larger.
So after you have drawn your fill, then I'm gonna have to move
pretty bad.
Sorry, you were breaking up a little bit. Repeat your question.
I think you broke up.
My Wi-Fi.
Okay. Anyone else have any questions for me? I could do this all night. I love this stuff.
I'll bring my questions tomorrow, Bats.
Okay.
Yeah, I'll
anybody else want to cover something?
What's that?
Okay, my last question for you for now is, and I'm going to try to join tomorrow. You'll have to share a link or something so if I can join your room. But okay, so after you draw your fib lines and look at what you think the price action is doing, you'll then go ahead and look at what you've already looked at the options for the day, or that's when you then look at what your options are.
Yeah, so as let's say on 1 minute it now hits 275. I then look, okay, 275, what are the options for the same day? What are the options for day after tomorrow? So let's say it's Monday, it's 275. I look at the price of the options for a same day expiration. I look at Wednesdays, I look at Fridays. And then based on where it is it high of day? If it's high of day, I'm going in with 275 puts. If it's low of day, I'm going in with 275 calls. And then I just start dialing around, fooling around with the price. Because remember, I've got $5,000 I'm going in with. If I was going position, then maybe I would go for a shorter expiration and try and kind of maximize my gains from that smaller position size. But $5,000 for me is now my sweet spot. I might increase it to, $10,000, but 5,000 gives me about 50 contracts that are priced around $1. And so I buy 50 contracts, and if wherever the price is, it's at a low, I'm going with 275 calls. If it's at a high for that day, I'm going with 275 puts. Did that answer your question?
Yes, and I know that there's still going to be some variation based on what you told me earlier about possibly going out of the money more, or
Correct.
a little bit money.
Yeah, I did more of that when starting earlier, trying to feel feel the trade. And of course, I started with a smaller position size. Like I said, I started with 500 initially. And so for me, that almost served as my paper trade, going in with a small position and testing it for a couple of weeks. Now that I'm at $5,000, I can go with at the money or slightly out of the money, or in the money puts or calls. And I don't have to be that aggressive because of my position size.
Yeah, and on short time frames, the out of the money are going to have the biggest moves if the stock moves, right?
Correct. And the SPY will, trust me. Like I said, it moves $2 a day. Look at a $2. The other site I like to go to is Option Profit Calculator. Look at the SPY there. Look at a $2 move on the SPY and tell me, tell me what you see there in terms of percent gains. Especially if it's a same day. If it's a same day expiration, you're looking at hundreds of percent gain. 300, 400, 500% gain. Sometimes it could be 1,500%. Obviously, I'm typically picking, like, let's say if I go in on Monday, I'll pick a Wednesday expiration or a Thursday expiration. And this, going back to what I said, this is why the Greeks and time decay have no relevance to me, because I'll pick an expiration date that's so far out, but then my trade is only lasting 5 minutes to 30 minutes. So time decay does nothing. I mean, I don't even have to bother about time decay because my trades are so fast.
Yeah, and if the beautiful thing too.
Sorry, you're breaking up.
If it doesn't go your way, you actually can hold it longer, and the chances that you're going to at least be able to break even are very, very high.
You got it. You got it. Couldn't have said it better. You got it. I trade, and I hate to be wrong. When a trade goes against me, I simply wait. I mean, I can afford to, based on my position size, I can afford to lose a little bit, but I found being patient with the SPY, because because I've studied the SPY extensively. it often just helps to just be patient. Just step back, let the trade do what it needs to do, but don't just panic and sell the position and say, "Ah, I just lost $1,000 there," or whatever it is. If you went in with conviction and your thesis was this is what's going to happen, just all I would say is give yourself more on expiration. So, like you said, you're able to wait for the trade. Um, but yeah, I'm this, and I hate to sound cocky or arrogant about it, but when you know what you're doing and you know how you trade, it's just a fact. So if a trade goes against me, it goes against me. But because I factored in 2 days away for an expiration or 5 days away, I just simply wait for the trade to do its thing.
Right, Kansas.
Hey, Mag, how's it going?
Good, good. I sent you an IM with the Fibonacci retracements. Can you take a look?
Oh, I'm on my phone right now, but
Okay.
let me see. Hold on. I'll go to my computer so I can see it clearly. All right. Let's see what you sent me. Okay, what's your question about the fibs, Mag?
So when we draw a Fibonacci retracements, you would draw from the bottom of the candle, which is reversing back up from the daily low, and then from that point you would put it to the pre-market high, and that would be the Fibonacci
not
retracement.
pre-market. I don't do anything pre-market, post-market. It's during regular hours draw. So what you sent me here, I would actually have redrawn this because you've got, if you look at your 0%, there's still candles above that. I would put it at the high and low and redraw that.
That time there was no candles, so this candles appeared after.
Okay. And
can you share that in the main chat or no?
Yeah, sure.
So I draw them the Mag. I've got the 100. I've got the 100% on top and the 0% at the bottom. I draw them from top to bottom. But if this works for you, that's fine as well.
Right. I mean, the Fibonacci retracement lines and the percentage are the same when you draw from the bottom up or at the top to bottom. The only difference is that the numbers change from the top to bottom and bottom to up. So if you recognize that change, then you're basically doing the right thing.
Correct.
Yeah. What chart are y'all looking at? Right. Where is this?
I posted it in the trading room. The 1 day, 3 minutes on Friday. No, not on Friday. It's on, I think, Wednesday. I just posted it. I was asking if he would draw it the same way I have drawn in the screenshot. And he said he would put the 0% at the bottom and the 100% at the top. I did it from the, so when I waited for the stock to go down to the low, and then I draw a retracements from the bottom to the top of the pre-market high or the actual opening 9:30 open price. And at that day, on that day, June 20th, it did went a little bit above and then came back down, tested it again, and then dropped all the way back to the 60%
Yeah, so when it hit that bottom right there from what you sent me, Mag. I'm already thinking about calls. And what price was that bottom?
You're talking about the option price or the stock price?
The stock price.
70. 1 second.
Looks like 27. Is it 270? I can't. I think you shaved off the axis there with the prices. I can't tell what price. 270 something.
Yeah.
Anyway, yeah,
I think I think I can get it right now. Just a second.
Okay.
And SPY on that day, on the 1 day 3 minutes.
Okay, this is a 3-minute chart. Okay.
Right. On the 1 day 3 minutes, I'm going to draw it here to pre-market high. It's 274.70.
Okay, yeah, so 274 and it's at the bottom. I'm going to go with maybe like a 275, or if I'm more conservative, I'll go with it 27. I'll go the next 50 cents below that, the closest strike price.
Yeah, I did the same thing at the time. I just posted a screenshot of my trades on the paper trade, not as real money, but paper trade. I just posted it just now. I did buy the 276 call at the time.
Okay.
From reversing the trend, 50 calls, 276, 93 cents, and then sold at 101. I mean, I could have hold on to it a little bit longer, but then I was traveling. The internet was spotty, so I just traded it that way, just as an experiment to understand what you're doing and what is that which is working for you, and if I could replicate the same thing on my end. And I'm just practicing it, and it does work. It's just that you have to be monitoring the things, and you have to be at that point on the reversal.
Correct. But
that was a just perfect trade. You have to jump in.
That was a perfect trade because I often do trade around the 93-cent mark, and then I will sell maybe at about $1.14, $1.20. That's actually my typical trade.
Yeah.
And now that I found the chart that y'all were talking about, were you basing that trade off of the low that happened in the looks like the first hour or so?
Yes.
Is that
around 7:30 Pacific? That will be 9:30 Eastern.
And Meg, what day? Chart.
Wednesday, June 20th.
June.
Wednesday.
Okay, June 20th. Okay. June 20th. Let me just bring my chart up. June 20th. Okay. Yeah, and you can tell from June 20th. How much did it move that day? 275 to about 2. Yeah, so that's actually a bad day for the SPY. It barely moved over $1. That's actually a terrible day. Because the SPY typically moves $2 a day. It moved just a little over $1 that day. Is that correct?
Yeah, it opened it around, I would think, 276.32, and then closed again at 276.05. It was a red day.
Okay.
It go up and came back down.
But for options, I mean, you catch a 30-cent, a 50-cent move. That's still gonna get you some. Yeah, but this is this is a day because even if the chart, like on the 5 minute, you have a lot of like lower candlesticks at support at the bottom. I like to look at wicks as well because they'll actually tell you where support and resistance.
Okay. I was just practicing. It's good to practice and get the mindset right before you put anything.
Correct. Yeah. Yeah, it is.
The
Definitely.
point when you have to click on the button, you need to know that is the right thing to do and you have to be confident in it.
Exactly. Yeah.
Not hesitate and put a limit order at two points below and it would not trigger and you say that you missed it. So happens like
Yeah,
that.
and so for me that's difficult because I get like really stubborn with my trades. If like I said, I will not chase the SPY. The SPY comes to me. If I put in a limit order, I'm not budging. If the SPY doesn't hit my limit, I'm not trading it. That's how stubborn I get. Um, if I decide, okay, let me just get into the trade anyway. Um, my style of trading is sometimes controversial because I use market orders as well.
That's right.
If I just want the trade executed and I don't really care, I'll go in with a market order to have it execute immediately. And then on a sell, I could do a market order as well.
It's definitely a good thing to do what you're doing, but that's the only thing which is available, which is legal for you. And for people who are day trading, who practice much more and they become more confident in this, they can do it better. But for people who don't have the day trading capability, who have to go and do a day job, so for them, then this is not the right thing. They have to do it on a swing level.
Yeah, and then because if like I said, I liked often to wait for the last 2 hours of the SPY. If you have access to where you can look at the SPY in the last 2 hours, get in your trade and make your trade. Sometimes if it happens over lunchtime, where whichever time zone you're in, but if you don't have time to do something like this, then at least with my strategy, there's some ways you can get around it, but it still involves being able to catch the low of day or high of day, and at some point throughout, your work during the day, you would need to be looking at the SPY and getting in or getting out.
Right.
But yeah, I mean, it's a very relaxed stock to trade for me, and like I said, I started trading it two and a half months ago and just never looked back. It's all I've needed to trade. I like to call it boring but profitable, but profitability is what we're in this game for. But we also want consistency and reproducibility. This is something you've got to be able to do every day. I know with trading, the one thing trading doesn't give you over a regular job is that steady income. This is as close to a steady income, at least with the way I trade it. I'm almost guaranteed of getting something every day off of the SPY. In fact, right now, I'm making double my salary trading the SPY, and I'm making double the salary 10% of the time. It's not taking me 8 hours of work every day to make what I make in the SPY. And so I'm making double my salary. So with my salary now, it's like there's three of me working and bringing money home. It's incredible.
That's amazing, man. I'll tell you later on. Well, I hope to we're just getting started. I look forward to being able to chat with you many days from now too. On the future, I'd be curious to see how well this fits with what I understand as a fantastic future strategy, because you could be doing this exact same kind of thing with as much probability, and maybe even more so with the futures contracts, and be making even more bank. And this is good though.
And correct me if there's no expiration on futures, right?
Exactly. You got the leverage, but no expiration.
That's I better learn then. That's the way to go then.
It's just that the price of the contract's like $5,000, so that's why I'm not doing that.
Oh wow, it's $5,000 for one contract.
I'm not sure what it is right at this moment. Does somebody know?
Wow. Okay.
ATL probably might know. Huh?
Okay. But yeah, I mean, if this works, you can apply it to futures. I mean, that's great. Yeah, for me, right. When I trade the SPY, when it's a slow day, I tell the wife, today's a slow dollars, because she's used to me telling her, oh, I made $2,000 or I made $3,000 today. So a slow day is like $500. And remember, 5 daily target. So my daily target is now a slow day. Hilarious.
Yeah, you need a 5,500 for the SPY. I mean, for the ES, the E-mini.
Oh, okay. Okay. Wow. Yeah, that's a bit pricey, but if your trades are reproducible and the success rate is there, why not? Where you guys West Coast or on the East Coast?
I'm out here in California.
I'm in Phoenix, man. Still in
Phoenix.
Oh no, yeah, Tyson.
Yeah, we're just talking over these options,
bro.
We're
We're
getting
getting
ready
ready
to
to
kill
kill
some
some
more
more
stuff.
stuff. I know
Rock
Rock
Solid
Solid
had
had
a
a
solid
solid
week.
week.
Some of
Some of
these
these
other
other
guys.
guys. So
I know you're
So for
hitting
you,
us high up.
for you, Tyson, because you're in a trade potentially for weeks or even a few months, you maximize, like, what's been your biggest gain, for instance, like on a stock that you typically trade or hold on to for weeks?
Well,
well,
since I'm
since
not
I'm not
putting a
putting a
whole
whole
bunch of
bunch
weight
of
on
weight on
any
any
one
one
position right
position
now,
right
I'm
now,
kind
I'm
of
kind of
trend
trend
following them,
following
so
them.
I,
So
I
I
have to
have to keep
kind of try
try
to
to
keep
keep
it
an
even.
even weight.
But
Okay.
I keep
I keep
less weight
less
on
weight
mine.
on
I don't
mine. I
keep
don't
a
keep
lot
a
of
lot
weight
of
on
weight
any
on any
losers, but
losers,
my
but my
winners,
winners,
when
when
they're
they're
performing
performing
well, I
well,
try
I
to
try
keep
to keep
a lot of
a
weight on.
lot of
So
weight on. So
my
my
initial,
initial, I never
how do I
put,
say
how
this?
do
I
I say
never put
this? I never
over
put over
30 to
30 to
40%
40%
of
of any
my
of my
whole
whole
initial
initial
capital
capital
on one
on one
trade.
trade.
So I have
So I
about
have about
30%
30%
of my
of my
initial
initial
account
account
inside of
inside of
TNDM.
TNDM.
As much
As
of a
much of
big
a big
winner as
winner
it
as it
is,
is,
has
as it's
been, I
been, I
still
still
cannot
cannot
put my
put my
whole
whole
account
account
value
value
into it
into it because I'm for the
fact that I'm
simple
holding
fact
it
that I'm
overnight,
holding it overnight,
I've
even though
been
I've been
open long
open
on it
long on it
from
from
$7.
$7.
Okay. And what's the trade you've ever made when you trend follow?
Oh, hold on 1 second. Hold on 1 second. Before he says that, dude, you been in tandem since 7?
I've been
I've
in
been in
TNDM since
TNDM
7,
since
going over
7, going over
my buy
my
signal was
buy signal
650
was
going into
650
7,
going
and on
into
my show
7,
I
and
had
on
a
my
buy
show I had a
signal
buy signal
from
from
7 going into
7 going into
750.
7.
Man, man, hallelujah! That is awesome, brother. That is wonderful. Great job, man.
Yep.
Yep.
But
So how
since
long you holding for?
I'm
You
growing
just
my
gonna keep
account, so
riding the
the
wave?
more I grow my account, the more bigger weight that I can put on all these positions.
Wow. That takes a lot of patience, discipline.
Yeah, but take a look at the reward. Of course, these are exceptional plays. But are you looking to just keep riding the wave, or what are you looking to do with it?
I'll be riding. Yeah, I'm a trend follower. I'm a trend follower. So from my studies from like Mike Gravel and Larry Ticciarelli and that guy Druckenmiller that I just posted up on there, those guys are all kind of like trend followers, and the science behind that trend following is that when we see these higher highs and we see these breakouts over, it could be a new 52 or it could just be old resistance, on good decent stocks. You take longs on them, and you don't just have one. Like for instance, we were just discussing fossil and all these other trends. So I've got open positions on LiveX, fossil, not fossil, but something similar. I will take an open long on fossil coming up. TNDM, Intelsat said 750. TRXE, some other winners, BLFS, ENP, and Golf. So right now I have like 7 positions, but 4 of those, HEAR also, if anyone wants to check and go back on my show. So on May 3rd, I basically, how do I say this? I like premiered TNDM because I have like a trend following stock watch list type of show. So all we do is just keep following whatever stocks are in uptrends and blah, 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 blah. But TNDM, I backdated back to May 3rd. I showed, what the opens, how we were looking at it, it was in a trend. So you can actually go back and see some of those longs are real quick. So I'll just ride them. I don't know if when I open these longs, I don't know if they're gonna go from 7 to 10 or 15. Sometimes I'm happy if they just go a few points, but some of them I buy them in the lower left of the chart based on what the stocks having these consistent higher highs. Just like some of the charts me and Rock Solid were looking at. I kind of only buy stronger uptrends, like I only ride like consistent stocks. I don't kind of trade shitty stocks. So I have to be trading a stock that's having consistent higher highs, lower lows on the chart. Stocks that look like Sirius XM and Denny's and HD, the ones we were just looking at, some of those type of fossil. Amazon, Facebook. Even though I don't trade a lot at Facebook and Amazon, but I have to take these entries and ride them until they go. So I don't know if they're gonna go past the top right, because right now they're in the top right of the chart. So I don't know where they're going to go. HEAR is another example of another one that we started opening longs on $758, $850, and then just it's a 20-something dollar stock now. TNDM's a $24 stock. Last week, I think last week when I was talking about it, it was like a $20 stock, and I was like, damn, $20 stock. But now it's like $23, and it will be a 25. It's just barely starting to meet that upside. I use a rounding bottom. I was just talking to these guys. I use a rounding bottom. That's what I use for my. That's like my main go-to pattern. I'm going to do a video on that too, about that rounding bottom, because most of these stocks are kind of like in that rounding bottom structure, like you pan out on a 5-year time frame. I just like to follow the predominant trend. So if the predominant trend saying we're having higher highs and lower lows, and there's room to move on the chart, then I need to be opening those longs, hold them, and ride them until they start reversing in price. But if you look at stocks like Facebook and Amazon, if you bought those higher highs and higher lows, those stocks haven't stopped running for 4, 5, 6, 7, 8 years. And I'm not saying that you have to hold them that long, but could you imagine all the people that blow their accounts up in these months or weeks or however long you're holding these winners? And you're making thousands. Like I've just put a quote up there from Jesse Livermore. It says, "Don't turn a 20," because Jesse Livermore made the equivalent of
billions of
$1 billion back in his time because he's from the early 1900s. So he made hundreds of millions back in that day. So the equivalent of that in this days, a couple of billions of dollars. But he used that, using like trend following purposes, like buying higher highs and holding them until that they went as far as it could. So like if you bought Facebook and Amazon, I mean, you'd be like quadrupling your funds and stuff like that. So it also works on calls and options. I haven't read anything up there. Yeah. Intelsat. I was trading that, and I heard some guys asking me, some guys on Stocktalk, talking about it. And they were like, "Oh no, I'm bearish." I'm like, "Oh, okay, that's not gonna work out."
So, dude, what got you? This is awesome, by the way. Thanks for sharing that. I've got a number of questions for you. First of all, you said something about you have a channel or a show or something. How do I find that?
It's just a YouTube channel. I'll post it's the same link I'll post the link in there shortly. So I just do something on like Mondays, so we know what stocks we're following because like I don't know. It's hard to explain. Like it's like swing trading. It's like I don't just buy stocks to have them for one day. I kind of trade them for you know what I'm saying, like a amount of time until they say sell.
Now, okay. Well, I'm probably a really short-term swing trader then, but like anywhere from 3 to 5 days or something. But on your time scales, what would tell you that it's a time to sell on something like Turtle Beach or Tandem?
Just like consistent lower lows. I mean, if you look at the charts, those charts are so consistent with higher highs.
So we look for like several days or a week of lower lows, right? Because obviously
not lower lows, higher highs and lower lows, which is basically higher highs and higher lows. Sorry.
I mean when the trend's reversing, so lower highs and lower lows.
Yeah, when the trend's reversing. When the trend's reversing. What do you ask about that?
I'm trying to say what is your signal to sell?
My signal to sell is basically based on the trend. So it could be like there could be a trend line there. There could be some a reversal in price action, like low. Like I got whipsawed out of Intel, but then I got bought back into Intelsat because it set two or three lower lows, and the prices seemed like they were reversing, but it wasn't. It was just a major pullback. That's what like getting whipsawed.
And this is on the daily.
This is just period. On the daily, like on the when you pan out the time frame, because I don't use very tight time frames. I use the time frames pulled back. So the patterns match so that activity matches the long term, the predominant.
Right. So the so you'd be looking for daily.
Huh?
For any, you wouldn't go smaller than the daily for any kind of discontinuation of a trend or trend reversal. And in that case that you gave, say I'm looking at HEAR, and so just let's see, at the end of May there was 3 or 4 days in a row was red, but it didn't, we still stayed in the same trend.
It was still inside the trend though. It probably had red days, but they didn't totally collapse outside of what the regular predominant.
You're right. I see that. Mm-hmm.
Now Intelsat, if you look at Intelsat's chart, that's like the only one that really had like a major pullback outside of like what the initial chart looked like. And plus, when HEAR went up, you see when HEAR went up into like $20, then it kind of got a little funky. But other than that, it was just consistent higher highs and lows until it got to where. So yeah.
Yes, beautiful charts, man. Don't forget to post your YouTube unless you did already.
No, I won't. Hey, Batson,
Rock,
you guys got anything?
I didn't know I had you muted the whole time.
Yeah, I had a question for you, Tyson. I think you didn't quite answer because another question was, what's the shortest trade you've had in trend following?
I mean, well, my losers take a little bit of time to show up because they have to change.
Would you say the shortest time you've made a trade, has it been 1 month, 2 months, 3 months?
Oh no, sometimes I'll take a trade and I'll just get out like in a few days. I'll say, oh no, this ain't gonna work.
Okay.
But if I get in the trade and as soon as I see it's not gonna work, I might be there a day, 2, 3 days, and I'll say, no, this ain't gonna work. This thing is just, I just don't like it. It's shit. You know, it's going the opposite way. It's not what I thought it would be. But then when I get into a winner, I would know like within a day, 2, 3 days, it's a winner. It starts adding, and I just sit tight until. And when it starts setting those higher highs and lower lows, it's business as usual from there.
And what's the longest?
The longest winner I think I had is TNDM. It's probably the biggest and longest winner I've had, the most consistent. But the more I trade, the more my account grows and the more consistent, with the trends I can jump back and forth. But that's like 2 months.
Oh, okay, 2 months. Okay. Wow.
Are you taking profits along the way?
So when I first make my entries, I make them on higher highs and lower lows, or when they break out, on breakouts, like when they break out key resistance levels, I'll set like 5 trigger stops to get me triggered into trends. But I don't take very large positions when I first take my entries. But as price continues in my favor, on the next set of higher highs, I'll add to my position. The next higher high, I'll add to my position. On the next higher high, I'll add to my position. And then I'll get to my full whatever I want it for my full total sort of like whatever I wanted my full initial position to be rather than like I said, whether I look at my whole account value, I would say I can't even put half of my whole account into one stock in case something happens. But I'll get close to half. I'll say 35%. I'll put into one really good winning position, and then I'll just let that trade. That way, if that stock goes 200%. I mean, if it goes a freaking 300%, it won't be a 300% win to my initial account. It might be 100 and something percent to my initial account. But that way, if it pulls back 25%, if it has pullbacks, it won't, be such a drastic measurement on my losers. But like I said, I don't take really large initial opens on my first trades because in case they go against me. So if they go against me when I first enter, it's a small loss. Okay, big deal, small loss. When I start adding my size, then I get to my initial size of my winners. I let my winners ride out. And then when they get so far down the chart, I'll knock off 70% of my initial position. So I'll be down to like 15%, 20% of my initial account sitting inside of one winner like T. Right now, I still have a lot of weight in TND, but I've rode it so far. It's like I don't need to have so much weight. I don't need to have 50% of my account still sitting in TND because I've already rode it for like 200%.
That's what I was wondering. Thank you.
Sure. But I have some. I'm gonna add some more weight to that because the chart showing that it could actually go to like $50, $40, $50, $60. So I might add a little bit more weight there, but I have a lot of there now. Like 200. To me, a lot of weight on the stock like that is like 500 shares, 200, 300 shares. but when my
when my
account gets
account
big
gets
enough,
big enough,
eventually I'll have like
eventually I'll have like
1,000 shares
1,000
here,
shares here,
200, 2,000 shares there.
2,000
But
shares there.
like if I had
If I
1,000
had
shares
1,000
on
shares on
TNDM,
TNDM,
I hit winners
I
like
hit
that
winners
about
like that about
I hit
I
about
hit about
15, 20,
15,
30 of
20,
those
30 of
winners a
those
year,
winners a
easy.
year, easy.
I mean,
I mean,
easy.
easy.
And
And
that easily be
that
like
easily be
20,000, yeah,
20,000, yeah,
$20,000 win
$20,000
possibly.
win possibly.
It should
It
be, but
should be.
I'm growing
I'm
my
growing
account, so
my
I'm not in
account,
a
so I'm not
rush.
in a rush.
So Tyson, are you a full-time trader? This part-time?
I'm not a
I'm not a
full-time trader
full-time
because I
trader because
still
I
work for
still
the
work
city
for
of
the city
Phoenix,
of
but
Phoenix. But
I'm headed
I'm
towards
headed
my
towards my
goal.
goal.
I want to get
I
to
want to get
roughly
to roughly a quarter
of
of
$250,000 before I
$250,000
actually
before I
go
actually
full time
go
and
full time.
just rely
Just
on my
rely on
trading
my
capital,
trading
so to speak.
capital, so to speak.
Yeah, understood.
But getting close.
Getting close.
I
I
definitely
know if I had to rely on my process,
I
I
could
could
do it for the
do
next
it for the next
20, 30
20,
years.
30 years.
I could
I could
live off of
live
it.
off of it.
It's
It's
profitable,
profitable,
definitely by far.
definitely by far.
Especially if I had
Especially if
enough
I had enough
weight to
weight
spread
to spread
around.
around.
Right. Yeah, I'm trying to get the point because I scaled up my position with the SPY from 500. I'm now at 10 times that at 5,000. I wonder if I'll get to a position where I'm trading with 10,000 or 20,000 in a trade. Essentially, I'm going to do what you are doing, but using options to kind of accelerate things a little bit.
I
I
like
like
that too.
that too.
I don't think
I
that's a
don't think
bad
that's a bad
idea
idea
using
using
options to
options to
excel.
excel.
Yeah.
Bats, what do you think
Bats,
is,
what do you think
to
is,
me personally,
to me personally, I think
because I make about
because I make about
40,000 some change
40,000
a
some
year,
change a
and I
year,
think I
and
should
I
need to
think
be
I should
about,
need to be
I think I
I
need to
think
be
I need to
around,
be
because you need to
because
have
you need to
2 years
2
of
years
living
of living
expenses, right?
expenses,
Then you
right?
need to,
Then
and you need,
Correct.
and you need
and
to
you
be
need to
able
be
to
able
like,
to like
and you need
and
to
you
be
need
able
to
to
be
like
able to like
trade for
trade for
another
another
year or
year or
two
two
before
before you
take
take
those
those
expenses that you're
expenses that
trying
you're
to
trying to
gain back.
gain
You know what
back.
I
You
mean?
know what I
Like
mean? Like
Yeah.
you want to
you want to
trade for
trade for
another two
another two
years and
years and
grow
grow
another
another
whatever you're
whatever
going to
you're
grow
gonna grow
before you
before
take
you
that. So
take that.
I'd
So
like to
I'd
have
like
at
to
least
have at least
2, 3 years
three
worth of
years worth
living
of living
expenses, which
expenses,
would only be
which would
about
only
a
be
hundred
about a
and
hundred
some
some
grand for
grand
me before I'd
Yeah,
actually
before I'd
exactly.
quit. But
actually
I'd
quit.
like for
But
my
I'd like for my
actual
actual
account
account
to be
to
able
be
to
Right.
able
be near
to
a
be near
quarter of a
a
million
quarter of a
dollars,
million
maybe
dollars,
somewhere near that.
somewhere near that.
Yeah, definitely. Yeah. Right now I'm trading SPY at I've only been trading it for 2.5 months. I think at this rate, I'll probably make 100K definitely. But since I've only started trading it for 2 months, I think I'm at probably, I would say, if at this rate I trade, could be as high as 130 or 150K doing this, assuming every week was successful. But definitely 100K is doable for 1 year's worth of trading.
Yeah, I think
Yeah,
I'll
And
be at the
Fat Bat,
No, go ahead.
what are okay? What platform are you using to, and what's your broker, if you don't mind me asking?
I'm a bit of an oddball. I use Thinkorswim for charting software. Sometimes I will trade in TD Ameritrade, but most of my money's in Vanguard and Wells Fargo. So I can trade in any of those three. Lately, I've been using Wells Fargo. So I can pick like I've got a smaller account with TD Ameritrade. So that's what I use trade in there, but most of my money is split between Vanguard and Wells Fargo.
Tyson, what's your what's the name of your YouTube channel?
Trend following.
Trend following.
Jim was calling me, but I didn't return her call back. That's because it's just not his.
Yeah, we're live on your channel now.
The more money,
yeah.
The more money, the more time goes, the more money I'm gonna make, and the more happier I get. Like when the market's open, I know there's gonna be some more money to be made. So I'm just.
Somebody needs to mute their mic.
What?
Somebody need to mute their mic.
No, that's me. Yeah, that's me right there. And thanks, man, for that. I don't even know how to get that damn thing. Oh, that's Adrian. The living parable. Is that you? Thanks. Oh, that's this guy that's talking right now. The living parable. Who the hell is Adrian, man? Are you Adrian, bro? Because that guy Adrian is the one that's kind of like is the one who's like echoing. All right, I muted him. But all right, yeah, man. So Stangam, you can come in and talk, man. What are you doing? Living parable you've been talking to. Oh, that's living parable. Yeah, I know. I was talking to living parable. Who the hell is Adrian?
Yeah, my name is Matthew or Matt, but I'm the living parable on here.
No, that's cool. No, this guy named Adrian at the top was the one. Hey, before we close out this, before we shout out to Adrian, Agustak, ATO Trader hasn't been here in a while. Finally, you came back, bro. Bat Scientist, chopping it up with the Spy. Me, Bull Cosby, Bull Bear was here, Stock God was here, fucking it up. Cali Girl was here, Cali Rob, that girl from wherever the hell she was that you guys was all thirsty and shit. Dr. Stangam, Cali Rob was here, Investable was here, Invest Lee, Cali Rob, I haven't heard you speak yet. Jay-Z, Lisa Lee, welcome, first time. Jazzy, you're here. Invest Lee, I've never seen you. Mondo, you haven't spoke yet, I wonder why. Marcel, welcome. Quick Turtle, welcome back. Everybody here. Roland, Stocks 101, Stoner Trader, 777, The Living Parable, and Thorpe. And Bull God has his 1 cent spread room in case anyone wants to jump in there. Kind of. But I don't know. I'm a trend follower. I just did my research, and the billionaires and the guys that I like to trade, they make my win rate there is really high. I don't make a lot of mistakes when I'm following my trade. So, I don't know. My risk is capped off at 1 to 2%. My risk is capped off at 1 to 2%, and my winners, obviously, they go for man. So I'm just waiting the wave out. I think the more time that goes on here, the more money I'm going to be, returning back because the more my process is just, man, process over protein, man, is the main thing. But, yeah, Bat. So I just wanted to cover that with these guys. You guys are good, man. You guys got anything else? I will be following trends until the end of time.
Man, that's what's really fantastic. I mean, that's fantastic, bro. What's something that I think is quite remarkable for us to just take note of is the fact that on this one time of us hanging out, we've heard 3 completely different strategies that use completely different setups and techniques that all produce consistent results in the market. The first one being the the 1 cent. I don't know what they call it, the 1 cent one. And then, of course, what Bat was sharing, and then what you've shared, and all three of you have been able to talk about, how you've been consistent. And the number one issue with trading is consistency, and it's just amazing to see that it just shows you what opportunity there really is.
It's just like I tell people, it's like if you look at a football team, there's quarterback, there's the receiver, there's the running back, there's the offensive line, and then there's the defense. And so the defense in this case will be the short, the traders that are short biased, and then versus the traders that are long biased. But if you look at a football team, that offensive line, all those receivers, those running backs, the quarterback, the wide receivers, all those guys, so there's multiple positions to play in the market. There's just not one position to play, just like a football team. But all of those positions are productive, in essence, to that team's productivity and for them to complete touchdowns and whole case like that. So it's just what I'm just trying to say is that there's a number of different positions to play on this market. You just have to find what position is yours, rather you're a quarterback, rather you're a running back, and you'll know just like a running back and quarterback, they have those kind of natural talent that make them valuable running backs and quarterbacks. I think it's the same thing in the market. You'll find what fits your niche personally, and then that's what you should go with. But don't try to be a quarterback and a running back. Just find one and perfect that one. And it doesn't mean perfect one stock, but it means perfect one process.
Yeah, and another thing, what's so beautiful about that analogy too, and it fits perfectly, is that though there's different positions and all of them are key to the success of the team, and each one has their strengths and weaknesses, they all have core principles, and disciplines that are across the board. And you see that with all these different strategies.
Yes, sir. Yes, sir.
And it goes to show you that, with that said, that what we need to do as traders and as starting traders, people like myself and others that are here hungry and learning, is that the emphasis is not so much on finding the thing that's going to make you the most money, as much as it is actually honing and crafting your ability to be disciplined and to understand the principles that work across the board.
Yeah. Yeah, I agree, man. 100%.
Like not being, not being ruled by your emotions, and a lot of the things that you see, not over trading, not chasing, all that kind of stuff.
Yeah, I think it's all inside the process. It's like, don't chase. It's just like, your process will kind of define what you should be doing and what you shouldn't be doing. And then when you, like Steng was saying earlier, like a good trading day is a day that you stick to your rules, rather you lose or you don't. Because like Larry Height said, there's good bets that win and there's bad bets that win. So I mean, there's good bets that lose and there's good bets that win, but grow accustomed to making good bets over the term of your career. Grow accustomed to making good bets. Don't grow accustomed to making bad bets because you may be winning on some bad bets, but eventually through the course of time, those bad bets will be bad trading, and it will be bad results, and it will be bad. But following your process, rather you have good days that win and bad days that lose it. As long as you know that your process is profitable, and through time it will show, and it will show up at the end. That's just like the same thing. I'm not able to buy 20,000 shares like Timothy Sykes and them, but in time my process will show improve, and I'll be fitting right in where I.
Yeah, one of the things I loved recently, I heard from I think his name is Future Trader 71. He said on a chat with traders, he was talking about how the worst thing you could do is judge your progress by your profit and loss, and the significance of getting away from that. And like a good trading day isn't a day that you made money, or isn't based on the money you made. A good trading day is based on whether you stuck to your rules or not. And that you like, using the sports analogy, you wouldn't want to you wouldn't base your next move on how good you did last time, whether it's shooting a basketball or hitting a baseball or catching a football. You wouldn't base what you're going to do next off of what you did last time. And yet that's how so many people come to trading. And so
yeah, no, I got you. Yeah, I understand.
Yeah, I understand.
Okay, well, I got to get off here. I wanted to say, for all of you that have been here to hear this conversation, I just want to say I'm grateful for everyone that participated. I'm glad I found you guys. I'm in a kind of unique predicament myself here. I'll probably share with y'all in the future, but it's kind of a strange ordeal why I'm into trading like I am right now. But I just want to encourage you all and remind you not to underestimate the difference that you make in this world, and to realize that the opportunities that we have right now in the stock market are money is just it's just a resource. It happens to be one of the strongest tools, but to remember that you want to get in touch with what matters most in life, and let this be something that gives you access to do more with what matters most to you, and to live a meaningful life, and never underestimate the difference that you make.
Yeah,
Yeah,
people
say
that
that money is evil and this and that, but money is really, it's
what you
just
do
what
with
you do
it.
with
But
it. But
don't ever.
don't ever.
I think
I
people
think people
underestimate that
underestimate that
money
money
is
is
definitely a
definitely a
tool, and you
tool, and
have
you
to
have
be
to
able
be
to
able
use
to
it. But
use it.
you
But you
do
do
need it. I
need
mean,
it. I mean,
even if you
even if
wanted
you
to
wanted to
help or
help or
feed a
feed
million
a
people,
million
I mean,
people,
you
I mean, you
can't
can't
feed a
feed a
million
million
people or help
people or help
much with
much with
if you're
if
barely
you're
living
barely
paycheck
living
to
paycheck to
paycheck. So
paycheck.
I
So
think the
I think the
market
market
is I do
I
like to
do like to
create wealth
create
in the
wealth in
market,
the
but I
market,
think
but I
it's
think it's
what you do
what you
with
do
it,
with it,
and
the
the people that you
people
can
that you
help.
can
But
help.
yeah, I
But
think
yeah, I
it's
think it's
important for
important for
people.
people.
I think
I
it's
think it's
weird
weird that you can
create such
create such
capital from the
capital from the
market, but
market, but
I think
I think
people.
people.
I
I
agree with
agree
what
with
you
what
said.
you
It's like
said.
if
It's
you
like if
have
you have
dreams and
dreams
such
and
forth, if
such
you
forth,
want to
and you
help
want to
people,
help people,
you can
you can
create it
create it
inside the
inside the
market. You
market.
can
You can
definitely
definitely
create it,
create it, but
that's
Yeah, I mean, the
awesome.
truth of the
awesome.
matter is that we've been conditioned to actually have a negative association with money, precisely because that actually benefits the people at the top, believe it or not. The reality is, money doesn't make any choices, only people do. So part of my message, and I'm a speaker, and I got a YouTube channel and stuff like that, but part of my message is to actually encourage people that have had their hearts stirred, that want to live a life that's meaningful, that want to make a difference, to recognize that it's exactly those kind of people that need to go after the money, because the reality is there's trillions of dollars sitting there every year to be had.
Yeah.
And you know what? Money is just a magnifying glass. So whatever kind of person you are, you're going to be more of that if you got money. So if you're an asshole, you're just going to be a bigger asshole with money. If you're somebody who wants to do good and actually cares about being a positive impact on the world, you're going to do that more with money. And frankly, of course, I'm biased. I definitely have an agenda to actually make a mark and do something that matters with my life. And there's no doubt about it that that money that's out there to be had is to be got by me and by you and by all of us. And I hope we can recognize that it is a powerful tool. And when we get that tool, we want to use it, and not just sit on it, but actually put it to use. And that's what we're doing with our money. We're actually using money to make money.
Yeah, I agree, man. I agree,
I agree,
man.
bud.
Always trade
your account in front of you. Don't feel like you're losing out.
Yeah, I just
trade your discipline and consistency.
Yeah,
Yeah, I totally agree with you 100% on that. ATL, always trade your account in front of you and don't feel like you're losing out on the big from other traders. Your discipline and consistency will bring you to their levels only through time. That's why I said I'm not really worried about the current state, because I know eventually I'll kind of get to where I should be and everything will be fine. I'll probably be flying right past Timothy Sykes, who has got relatively slow in the last few years.
Yeah, man. The key is just us finding that thing that's consistent. Yeah, I don't think that's me, bro. Mag,
It's me.
I have nothing going on in the background.
No, it's me. It's my background. It's not really my background. It's the thing up front.
Right now, I'm just trying to become consistent, guys, and I think from everything I've studied and learned, it seems like that's really the core to make this thing become, something that can really begin to make some serious money. Is it doesn't matter how small it is, as long as it's consistent.
Yeah,
that's
to be honest
to be honest with you.
that's where
That's where the confidence come from in a lot of good traders, is that they, when they start trading for a certain amount of time, they'll look at their process and they say, wait, if I do this, if I manage this the way I'm doing now, I could make such a return back from everything, because if I'm going at this rate now, the return will kind of, triple itself over time and kind of pay for all these losers. I think that's where the confidence comes from in good traders, is they look at their they look at themselves and they look at their process and they say, over time, if I keep this process up with this consistency in risk management, the consistency in the way I'm trading, I think over time this is really gonna it works all the time. If you stick to the process and if you stick to the risk, the management of the risk.
Yeah, I've definitely failed at figuring out. So far, I have not done well with figuring out how to. I trade options, and I have not figured out how to manage cutting them. I mean, I pretty much.
Hey, Dr. Stengel, you want to come in and drop something on that consistency? Dr. Stingham, Dr. Stingham, Dr. Stingham, Dr. Stingham, Dr. Stingham.
Roland says, "You sound like a Baptist preacher."
That's all right. I don't think Dr. Stingham wants to come in and drop any. Hey, but yeah, that's totally agree, man. I think over time, sticking with the processes.
But I've been
If
having a
you
hard
have a
time cutting.
process,
I haven't really been able to cut my options, man. I just let them go to zero, and I don't think that's the best way to handle it. But that's how I've been handling it.
does anyone trade options? Can anyone say something about that? How come your options don't let you cut them and cut a loss instead of it going?
Yeah, but you could cut, especially on Robinhood, you could cut those losses. Like, you got to think about, you're paying zero commission. So even if you're down a bunch and you have $100 left on that contract, just cut it, man, because those $100 are still your $100. Because I heard you earlier, I think you use Robinhood, right?
Robinhood and Tastyworks, which
Yeah, so both of those are commissioned really cheap, and that's what I'm saying. Like, if you're swinging something and if you feel like, all right, well, this trade went against me, I doubt it's gonna bounce back, and you still have $100-$200 in it, just pull the trigger and get the hell out, and try again with those $200 you just saved. letting it go to zero means that you put in $300 and you're like, fuck it. If I lose it, I lose it.
Hey, this is
Yeah,
Dr. Stengel.
I've been
Can y'all hear me?
struggling with that. Yeah, I can hear you now. Come on.
Hey, you you got to have a rule, man. You got what is your exit strategy? What tells you to get out? You got to have a rule. So whatever the signal is for you to get out, you got to abide by it. You need to make a rule. You need to draw a line in the sand and make a. And when you make that rule, you're going to do it every damn time.
Yeah, I haven't
That's
done
what I
that.
preach. You have to, whatever your signal is, as far as getting in it and out of it, you have to do it consistently to get good data. If you don't do the discipline of doing it over and over and over again, your data is skewed. So first of all, you've got to have an exit strategy. So I'm asking you, what is your exit signal? So obviously you don't have one, and you need to find one, and you need to write it down, and you need to abide by it.
Yeah, that's why I brought it up, brother.
And it don't matter what it is, but whatever you use for an exit signal, you've got to use it consistently. It can be RSI, it can be MACD, it can be whatever indicator, but whatever you use, you need to use it consistently.
That way over time your results will be consistent.
Exactly. Because we're dealing with probability.
Yeah,
and if you don't stick to that
dealing with probability,
your
right? You have
probability
to
will
be
be thrown
consistent.
off.
Exactly. You have to. It sounds boring as hell. It sounds simple as hell, but it's hard as hell to do the same thing over and over and over and over. It's hard, but sounds so simple, and it is simple. But our human mind, you know, we want to complicate things. We don't want it to be simple.
Because there's always something that the trader thinks that they can do at that time, the way that the markets are looking at that moment based off human emotion. It's like, I can do this right now, and it's not. Stick to the plan, and
right, because you're always hoping. You know, then you're holding on to hope, and you know, if you got to take the thinking out of it. So if you have a rule and you say, I enter at this and I exit at that, it's in stone. No ifs, ands, or buts. I get in here, I get out here, period. End of story. There's no thinking in that. And you do it over and over and over and over. And then after time, it becomes automatic. Then you can start increasing share size because now you have your probabilities. I'm going to tell you right now, you're going to be in the 90 percentile and nobody's going to believe. If you do one thing, entry, and your one thing, exit, and you do it over and over and over again, you're going to be in the 90% win percentile. And nobody's going to believe.
ATL was asking about my four legs to a table analogy. Well, the four legs to the table are the entry, the exit, the position size, and the risk management. If you don't have those four legs kind of situated correctly inside your trading scheme, then your table will be a little wide. It'd be like sitting on 3 legs or 2 legs.
Yeah, and I'm loving this, guys, and I'm taking notes. Listen, the thing that's what's been and that's why I even brought it up is because I want to get this down. I've been using I'm just beginning, right? So I'm using really small size. My exit strategy has been has been the money I put into an option. I'm assuming I'm going to lose it, which is not the best way to do it.
It's not. Look, options are they're predefined already by the amount you put in. So if you put in $500, it's already predefined that you can only lose $500. But the problem is, do you want to lose $500 every time you're wrong? No. You want to eventually, if you're wrong, let's say you're like, oh, I'm gonna risk $100 on this play. You know, that's the way I look at it. So I have a risk. You know, the way I look at it, I go 2 to 1. So if I get into an option, you know, I give it like 10%. That's just me personally because I don't go in heavy. So I give it 10%, you know, and I'm willing to make 20%. If I'm wrong at that 10%, I'm out. No matter if it bounces back, oh well, I already had lost that 10%. But if you sit there and say, well, there goes 20%, 30%, oh, it's gonna bounce back 40%, 50%. No matter if it bounces back in option, you know, you're gonna have to expect to double the move that you were expecting, because now you need to gain back that 50% plus what you're expecting to make. You got to eventually cut those losses.
Don't you think, man? Hey, Mondo, but don't you think the chart usually tells you to get out before then? We just don't listen to the chart.
Yeah, you could listen to your chart, you know, yeah. But the thing with I just feel like options to stocks, options move a lot quicker than stocks do.
Right.
So like you guys going bigger, you can't risk, you know, like what I'm trying to say is if you know 2% goes against you, you guys are going in with a size where 2% will really hurt you, 3%. You know what I mean? I go by percents, so that's just me personally. The chart, I look at it as I'm looking to make 20, 30% per trade. So if it goes up 30 cents, 40 cents, I'm probably gonna make that. I don't know how you trade, Stangam, but I know some of these guys, they'll be in there for like 10 cents and they're out. I can't do that in options.
No, I use straight up $100 risk. Period. My Friday trade was $100 risk, and I made $600, 6 to 1. I only took one trade.
What are you trading? Stocks or options?
Stocks. I've never traded options.
So let me. Hey,
my trading's like that too.
Dr. Sting, my trading's built around my risk. So whatever trade I put on is whatever I risk. Okay, that's fine.
I can risk that.
But whatever I could make, I don't know if I'm going to make 500. I don't know if I'm going to make 6. It just depends on what the trade gives me back. I mean, I can get $10,000 back, but that risk is always capped off at the.
Right, which yours is a little bit different than mine because I do have a price target, so I already know. You know, just because I do $100 risk though on a trade doesn't mean that I'm going to take that $100 loss, just like mine does. Usually, there's something in the chart that will tell me to get out. You know, before that. But yeah, I do have a profit target, so.
Yeah, like so Stingham, when you got into that trade, you said you made $600 on. Like, how big did you get in, like size wise? So like 100 shares, how much did that cost you?
It was 200. I took IQ 200 shares, took it at the open, and was in the trade 5 minutes. Took it from open price, a little bit above open price to pivot.
So yeah, I like pivots. You see, that's now back before I used to use the Ichimoku, but the cloud, but now I use pivot points. I used to draw my lines off of the daily. But now I use pivot points, and I like that. Like the pivot points based off of the daily, and that's how I used on Friday. That's how I used it. Like market drop, I was like, well, it's gonna reach a pivot point, which it reached, and then it started flushing a little more. So we were looking at the next pivot point. But I like that. What you just said, that's your price target. Like, yeah, because you could use S1 and S2 or you know R1 and R2 as a straight target.
And that's my plan, and I stick to it. Now, does it go past that pivot point sometimes? Yes, but a lot of times it will bounce. If you don't get out at that price, you're screwed because it will bounce and go again. So, you know, I've learned. So if that is your rule, that you take profit at that, you have to. No ifs, ands, or buts, because that is the bulk of that. That's the move. That's the play that I'm talking about. Perfect the play. The rest of it don't matter. Yes, it could go on down for another 2 points. It don't matter. It's about the play because you analyzed it. You had a plan. You executed the plan. It's about the play.
Yeah.
You do that over and over and over. when you start upping your share size, that is a guaranteed play. It's automatic. The rest of it don't matter.
No, exactly. So that's where I'm getting at now. So that's exactly why. Before I used to like the home runs, right? Before I used to like the home runs like anyone else. Like everyone wants 100% on the option play, of course. But now, the way, you know, I've been talking to bats a lot, and the way, you know, I understand more is kind of like, and it's something Quick Turtle and ATL Trader have told me beforehand. But I was more hard headed. You know, I was younger in trading, and I was like, "Fuck that! I want home runs." So, what was that?
No, go ahead.
No, go ahead, bro. Sorry.
So then now I've realized, like, dude, if you just aim for, let's say 20-30% of whatever you want to make, and you know options do that because they could make 100%, but if you compound that 20-30% daily,
exactly,
it's gonna add up. Like eventually, like you said, if I know this play does this, I could go from $1,000. If I go in with $1,000, then I increase to $2,000, $3,000.
exactly.
I already know what this play is gonna do.
It's
So
the
I'm gonna make
same
the
damn
money.
play, right?
Yep.
It's the same damn play. You see the pattern, you know it. You've seen it time and time again. You know exactly what it's going to do.
All right, Dr. Stangam, I got a question for you and the question for Mando. First, Mando, so are you saying for what you found, since you do options like me, is that 10% on options gives you at least enough room, though, to let it play out a little bit? Because that's been the main issue I've had.
So it just depends on your size, right? If you're going in with, let's say, if you're like he says, he risks, you know, a certain amount. So you could base it off of, there's a lot of things, right? So if I go in with $1,000, 10% for me is $100, or 15% is $150. So, you know, if I feel like it went against me, it's because I got in too early or I wasn't right. So yeah, I'm gonna cut it, because then that $850 or $900, I could live the next day and be able to trade. Now, if I let that go away, then guess what? Now I'm just gonna sit here and be like, damn, dude, I just lost $1,000. Why? Because I was wrong? Like, no, you have to have a predefined, like, I know $1,000 is predefined already when we get into these contracts, but you have to have a point too where you're like, I need to get out. So how much are you willing to risk? Like, if you go in with $500, are you willing to risk $100? Because now that's 20%.
Yeah, no. So basically, what I'm asking. So I mean, I've been doing small, like the biggest contract I've had is like 250. Okay.
Yeah. So rock solid.
I'm just practicing with little bits here and there, like anywhere from 50 to $100, as I'm trying to hone my. You know, so I'm like, I've been willing to let that go while I'm practicing, but now I've realized that it's time for me to take it up the next level, and that means I got to figure this out. That's why I was wondering if
you just got to think about it like this, Adrian. So yeah, you've been doing that $50 to $100, right, to practice how to learn options. But what happens? Oh, Matthew. So what happens when you increase, like you say you are? You're no longer going to be like, oh, I'm just going to let that go away. So right now what you're doing is you're going in with a minimal and you're expecting to make a good amount. But then is that really going to work when you increase your size?
No, which is why I brought this up. And that's why what I'm curious to know, and this is, I think you've kind of already answered it for me, is what I perceive that happens, though, is there's so much movement on my winning trades with options. The trade's gone against me over 10%, almost every time, but I've come out, 60 to 160% quite frequently. So I've wondered what is a good measure if in your experience 10% risk.
You just answered your own question, because you've been measuring it. So whatever the drawdown has been, and you've been able to recoup, that is the drawdown that you need to go by. You just answered your own question.
Yeah, that's what I was going to say.
So if it's 11%, 12%, whatever the drawdown is on your winner, that is your stop.
It can just be so volatile in options. That's the thing. It can be.
But so what you're pretty much saying right now is you're so unsure with yourself that you don't want to cut a loss, and that will, dude. And I'm telling you, because I've lost in these markets quite a good amount of money. That will burn you, bro. Because
that's how our brains work.
Yeah, that'll
you want to hold. You want to hold in.
Yep, that will burn you eventually when you get in bigger size, because you're gonna see that $200 loss and you're gonna be like, oh my god, I have to hold this. I don't want to lose that. Then it's gonna be 300, 400, and then you're gonna be down on yourself for the day because you're gonna be like, fuck, man, how did I get this bad?
Okay, so for you,
Cut losses quick.
whatever position you take, you figure out what the 10% would be, and that's what you're willing to risk. If it hits that mark, you cut it.
So $1,000 is what I enter with usually, and I'm expecting to make $150, $200 per play. So if I go in, yeah. So if it goes 100 to 150, I look at it like Dr. Stangam said. If I get in at a pivot at the S1 and it bounces, going long, then I usually get my 10%, because usually when it bounces off of a pivot point, at the time it gives you like a little 20, 30%, 30-cent move before it goes back the other direction. So I'll get out because I'm already up 10, 15%. I'll slap a trailer when I'm up. So if I'm up, so this is the good thing about a trailing stop. When I'm up 15%, I'm happy. So if it goes to 20%, I'm gonna put a 5% trailer, because if it goes back down 5%, I already made my 15%. But if it goes to 25%, I'm making 20%. Go, it's just pretty much what your dollar amount is. How much are you willing to lose? That's the way I look at it personally. How much are you willing to lose in your trade before you say, "Hey, I'm wrong. I need to get out"?
But here's the thing: you can always get back in. So always